Hello and welcome. I am Gary MacDonald, your 2021 Reno Sparks Association of Realtors President. Thank you for joining me today for another episode of To the Point. So let's get to the point about home loans. To help us better understand this important topic is our special guest, Yolanda Foster, Sales Manager of Homebridge. Good afternoon, Yolanda, and thank you for being here today.
Thanks, Gary.
So what type of business is Homebridge? When you say Homebridge Financial Service, I know you're a sponsor of the association, and I know you're in the loan business. Okay, so we talked a little bit about it. Tell us about the types of loans that you specialize in.
Okay, Homebridge is a residential lender, and we do all types of loans, just like the other 20 top lenders in the country. Government, conventional loans, jumbo loans. We are the nation's largest renovation lender and do all types. The 203K that a lot of you would know about, but conventional, jumbo, all types of renovation loans. We also do reverse mortgages for purchase or refinance. I have lots of broker sources where I can do bank statement loans, asset depletion, debt service, investor loans. I really would like to do all types of loans, or at least look at all types of situations so that I can help people get a loan regardless of what their situation is.
You brought up a great point. Since COVID-19 hit our lives, okay, a lot of people wanted to do two things. They either wanted to move where they really wanted to live, or they were happy where they wanted to live and really wanted to change the face and the state of their environment. Add a deck, do a kitchen, do a bathroom, which is a renovation loan.
Correct.
So talk to us about, you're in a home, you've got a client, you may have sold the home 5 years ago, client calls you up and said, hey, I want to do a renovation. Talk to us about a renovation loan, what's the process, and how does it work out for a homeowner?
It's actually very simple. A lot of realtors in years past thought they were difficult. They can actually be very easy to do as long as the buyer or homeowner, current, makes up their mind what they want to do. What kinds of repairs do they need? So in either case, either you're selling a home and it just needs to be spruced up, or they want some major fixes done. The buyer, borrower gets a bid from a contractor with the work that they want or have to have done. Ultimately, they give that to me, and we give it to the appraiser so that the home is appraised as if that work was done. Once that happens, that's the value that is used, and the loan proceeds just as normal. So I've just recently done one with a buyer, and they were very responsive. They got on the job right away to get a contractor, and we were done within 45 days.
Well, our market in the past year and a half has been dominated by cash. We keep hearing cash offers rule, everything else goes secondary, and I know that for a long, long period of time in our marketplace and around the country, FHA, VA loans were a very, very important part of first-time borrowers being able to successfully get a home. Now, they've been on hiatus a little bit more difficult to get an offer accepted. Do you see them coming back into flavor as we are in a gradually changing market that is having a little bit more inventory and maybe an opportunity for people to not be in quite so big a hurry to make an offer on a home? Do you think FHA and VA is going to come back into prominence?
Absolutely. I actually have done quite a few VA loans recently for disabled veterans, and I'm doing some right at the moment, and it's pretty amazing to be able to get them into a home. We can price them oftentimes to include closing costs, so they don't have to come in with more. The grant programs, I would say, are probably the ones that are a little down because most people are needing a little more cash in order to win those bids. So I haven't been seeing as many of those.
Okay. So the real estate business is a constant movement. everyone thinks that when it's at the top of the market, it's going to stay at the top of the market forever. When everyone thinks that cash loans or cash deals are the only way to go, all of a sudden we find out that isn't necessarily so. The market has a way of shifting, balancing, moving in a different direction. It can happen quite quickly. So you mentioned VA loans, and for a VA buyer, it's my understanding they can come into the transaction with no cash.
Or almost no cash. They certainly don't necessarily need a down payment. Their funding fee, if they have one, is less if they come in with some money. But there are closing costs, of course. So those still need to be paid.
Okay, so closing costs in terms of transfer taxes and
Correct.
Things like that. But people seem to have gotten a little bit of a bad impression on VA loans that may be a bit unjustified.
I absolutely agree with that. There's the old thought that the veteran can't pay for most of the costs, and that it really isn't true. In the old days, we used to, almost all of us would add a 1% origination fee, and that did use up their ability to not have to pay those or not be able to pay those costs. But we don't do that. So we have 1% that's available for most of the closing costs, actually.
Okay. What's your most popular loan right now?
Conventional. True. When you say that word, most people seem to think that that means you have to have 20% down, but that is not correct. Conventional loans, you can get in with as little as 3% down. It just means you have mortgage insurance. 20% says there would be no mortgage insurance.
Okay. Now, on a conventional loan with less than 20% down with a mortgage insurance, if you can establish that this home now has 20% equity, can that mortgage insurance go away?
Usually. It will ultimately go away after 10, 11 years, somewhere in that time frame. But if you've made the payments on time every month for 2 years, you can request that it be removed. Of course, it is up to the mortgage insurance company.
Very good, very good. So when we go about business, I found in my career in real estate and sales in general, it's a relationship business. What would you tell a realtor who's just meeting you for the first time today, why should you do business with me and why should you do business with Homebridge?
A number of things. Personally, because I'm a problem solver. I don't like taking no, this loan won't work, and it actually hasn't happened very often in my 18 years of doing this. However, I like to give all of my buyers/borrowers all the options that are available to them. I don't like pigeonholing them into a program that I happen to know well. I will do lots of research to give them options and then maybe guide them, but I'm certainly not going to tell them that this is the loan that you need to do.
Very good. Well, you've given us some compelling reasons to want to do business with you and with Homebridge. Tell our audience how to get a hold of you. What is your full name, full company name, and what's your phone number? Direct line.
Our company name is Homebridge Financial Services, Inc. Our phone number would be 775-332-1453. We are down in the DeMonte Ranch area, 500 DeMonte Ranch Parkway.
Yolanda, I can't thank you enough for being here today. Thank you for your sponsorship of the association. And may this little journey down recording way provide you with a lot of new business. Thank you so much for being here.
Thank you.
And thank you for joining me today for this segment of September's To The Point video series. Join us next week when Angelica Reyes visits the 4Kids Foundation in our next Community Corner segment. If you missed a past episode or want to explore the To The Point video series library, visit RSAR's YouTube channel at RSAR Realtors. Thanks again for joining me today. I'll see you next time when we get to the point. Have a great day.